Yeah.
Seven, 6, 5, 4, 3, 2, 1.
Hello, how are you doing? Welcome along. Welcome to the table for our non-farm payrolls coverage for the October jobs numbers. Welcome. How are you doing? How's your week been? It's been a busy week at FTUK. We have been covering fundamentals left, right and centre. So I feel like we are fully prepared for the non-farm payrolls, but I got a feeling that they're a little bit complicated this time around. It's so much easier when it's pretty straightforward. But as always, it's absolutely jam-packed. There's tons that we've got to get through before the numbers hit the wires in just under 15 minutes time. So let's jump straight in and let's cover everything that we need to get on with. You can see it there in front of you. The numbers speak for themselves. That consensus number this morning has been shifting around a little bit. We're looking for 113,000 new jobs out of the United States. That's from the previous 254. The unemployment rate, though, that is expected to stay level at 4.1%. Average hourly earnings on the year-on-year rate, they're expected to stay the same as well at 4%. And the month-on-month reading for average hourly earnings, they're expected to tick down a little bit of a dovish print there on the month-on-month reading. But I don't actually think that is going to be the determining factor. It's been a ragged week in markets, no question about that. But, we're going to break the whole thing down and I will go through it step by step. There's a lot of moving parts to this live stream as well this time around. We are very, very grateful as well to our sponsors, the Trusted Prop, and also to News Squawk as well, who have done an amazing job with us this week. There's still time if you want to get hold of their professional tools. You still can. You still get a 14-day trial with a 35% discount on the News Squawk tools. It's amazing. And we've got the News Squawk pumped into the live stream as well. So as soon as Adam Linton over at News Squawk gets the numbers, you'll be hearing them here first. As always, I say we do the best non-farm payroll coverage. So we'll have the Squawk live in the stream as well for you too. And then obviously stay around with us after the numbers as well, because we have a ton of giveaways to do. There's been contests and competitions galore throughout the week. And obviously it was Halloween yesterday. And we came up with an amazing idea to get people to send stories in, their worst trading nightmares. And boy, did people send some stuff in. Absolutely fantastic. We've had hundreds and hundreds of entrants for this. I can't believe how popular it has been. We're going to cover that and we're going to announce the winners of that particular contest after the numbers. And also as well, that will give the time, give the guys in the back office a time to crunch the numbers to find out who has won the NFP prize giveaway as well. We've got 3 accounts to give away, 3 2-step evaluation accounts, 10K accounts, and you also get, with those accounts, you get a 3-month subscription to the News Squawk service. I've never seen a prize like that. Absolutely outstanding. Really, really, really good prize. Okay, so let us begin. We've got 11 minutes, just under 12 minutes to go till we get the actual jobs data. Let's start by doing a recap on everything that has happened this week, because obviously we've been live streaming throughout the entire week, covering all of the fundamentals as they were happening, slowly building a jigsaw piece of what was going to be happening with the jobs number today. We'll start with JOLTS. That's the Job Openings and Labour Turnover Survey. That was printed on Tuesday and it came in lower. You can see the stepping down there in the chart there. That came in lower, 7.443 million versus the previous 8.04 million. That in itself gave us a sense of dovishness, just squashing down the jobs market. 24 hours later, complete turnaround. We got the ADP employment number, which is normally not really signaled these days as being a really high key event on the calendar, but it certainly was significant this week. We got a really, really high number, 233,000 numbers on the ADP employment number from the previous 159. that gave us a complete opposite reaction. So where jolts, we had the stock market giving us a dovish print, pushing higher. That ADP number really turned it around, and we'll look at the charts in a second, really pushed to the downside. So as we go into non-farm payrolls, it's a mixed bag. It's a really, really mixed bag. We've got a jolts number that is giving us a sense of dovishness. That is stocks up, dollar down. We've got an ADP print that's giving us the opposite. That is a hawkish play. That's stocks down, dollar up. Those two dynamics, they worked. We've also got to throw into the mix as well. We've also got to throw in the GDP data as well. That came in slightly lower than expected, giving us another sense of dovishness. You're squashing down the economy. Take some of those rates off. I think the Federal Reserve are due to cut rates again. I think it's next week, around about the same time as the election. Can't see how that's going to change at the moment, but nevertheless, that it will be in line with a dovish reading on the GDP. Then we also had this week, the inflation data, the PCE inflation. That came in line, but slightly higher than previous. So if you have to pick a side, you'd say slightly hawkish. So as you go through the actual data for this week, it's not easy. It really is not easy. We've got dovishness, hawkishness, dovishness, hawkishness. It's a real mixed bag. So it really is. It's not that you can use this as a framework, but basically expect the unexpected today out of the jobs numbers. Let's have a quick look at the charts before we look at the driving factors. Let me just bring up my charts here in front of you. You can see we've got that S&P 500 here. Now, let me just go to the other one that we had over the course of the week, because I just want to show you that S&P 500. I've been watching it very, 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 very closely all week long. I demarcated these as key areas of support. There was a lot of skin in the game on the Chicago Mercantile Exchange, on the open interest. So that should give us a supportive environment. And I said it on, I think it was Monday or Tuesday, that we could row back into this area, and that should, in theory, act as support. Now, when you get a down day like we had yesterday, very, 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 very difficult to actually think that we're actually falling into an area of support, because it feels like we're going to hell in a handcart. I dropped on the chart. This is where we got the dovish jolts numbers from, and we got that perfect reaction. Very short-lived, though. That ADP number came out, bang, look at that. And then yesterday's price action coupled together with a lot of earnings as well out of the US as well, it's given us a seismic push to the downside. Where do we go from here? Well, actually, we've only really fallen to the bottom of the range, so it is still valid as a buy the dip territory. What I would want to see today, I don't actually know what's going to happen next. Like every other trader, you can only ever try and figure it out as best you can with the information that you've got in front of you. But I would say that, for me, I would want to see non-farm payrolls give us volatility over the course of the rest of the session that holds above this area, holds above 5,678. That's my line in the sand. If we don't get a daily close above there, if we don't close the week above there, I'm just slightly starting to question the bullish side. Now, I know from looking at the CME that there was a lot of money came off on open interest on yesterday's price action. There's quite a big number. It's about 18,000 contracts. So in that sense, it's there's bulls coming out of the market, but on the other hand, you've got shorts taking profits as well. That could give us that sense of support. That's what I'm trying to get at. So it is it's an interesting one. It is going to be interesting to see how the numbers actually play out. Now, what I want to do is our friends at News Squawk do an amazing preview of the jobs data, and you go through it. You can get it if you sign up to their services and stuff, and they'll send it through to your inbox every single week, every single month. And they do a really good breakdown of all the details. I've pulled out some of the really key stuff. So just in the 6 minutes we've got until the actual data gets printed, we'll have a look at some of those driving factors. Now, it's a mixed bag going in, and no one's going to find this particularly helpful. But when in doubt, blame the weather. But actually, the weather does have a factor to play in the jobs number this time around. We've had a lot of disruptions in the US. There's been a massive hurricane. That does have an impact on the employment market. So don't discount that kind of pressure on the jobs market. So that could be baked into the cake as well. And also what's really interesting to note, and this came from News Squawk, a bit of context that you might not necessarily figure out, is that the NFP count started just after the hurricane started. So the Hurricane Helene started, and then the NFP was then counted. So there will be some impact on the jobs data in theory. But also as well, it doesn't necessarily mean that it's going to spill over into unemployment. Why? Because in a natural disaster like that, people will not be working, but they're not necessarily unemployed. Yeah, so it's not like you're increasing the unemployment rate. It's just that the output from the work is not being done because of the situation that people find themselves in. So that extra context is the sort of thing that you get from having a news squawk and learning those fundamentals as we've been talking about all week long. Now, this is also interesting as well. This obviously had an amazing ADP number on Wednesday. ADP's chief economist, very quick to get onto the wires and put his opinion across. This is what they said. Even amid hurricane recovery, the jobs growth was strong for October, adding that as we round out the year, hiring in the US is proving to be robust and broadly resilient. Well, I mean, you'd be talking your own book there. The question is the NFP number going to actually agree with that? Because the JOLTS number didn't, and given the situation, it's going to be interesting to see how it plays out. One other factor that you can bear in mind as well for today's print is the industrial action that we've had in the US. There's been a massive strike at Boeing. It's caused an awful lot of problems. But people that are in that situation of industrial action, they are still counted as employed. So don't necessarily think that is going to then just lean on the number one way or the other. They are still counted as unemployed, even though they're not actually outputting economically at that particular time. Now, I do believe, just for completeness, that the Boeing union, they've endorsed the latest offer, and that is hopefully going to end the strikes that have been crippling for Boeing. And get this is interesting. The company's latest proposal would boost wages by 38% over the next 4 years, and also give workers a $12,000 signing bonus upon ratification. I apologize. That sounds amazing. I mean, it sounds like a good idea to go and work for Boeing, to be honest with you. So, pretty good stuff. Now, let's have a look at the price action. Because what we're going to do, we've got 3 minutes to go until we get to the actual jobs data itself. It's just coming up to 26 minutes past the hour. Let's go back to the charts, and I'm going to bring up the different markets. And what we've also got as well is we've also got the news squawk feed in here. So what I'm going to do, I'm going to put my headphones on, and hopefully this is where it all gets a little bit technical. I'm not usually used to having to press so many buttons. Let's get this working now. So Adam should be on the end of this squawk now. So if I set this going, now when they talk, it should be going straight through to the live stream. So we should be able to hear it, and you should be able to hear it as well. And that's great because it means you get the numbers very, 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 very quickly indeed. Now, let's go to the markets. And what I'm going to do, I'm going to bring up my display with the 4 different ones on. Let's go to a 1 hour, let's go to 5 minute charts on all of the assets, and I will explain where we are. We're coming up with a couple of minutes to go. Now, that looks about right. Let me just move things over a little bit. There, right. Okay, so we've got that S&P 500, and that's in the bottom right-hand corner. We've got
in terms of price action in the rate space, it's just worth noting
that voice you can hear.
We are seeing in Treasury, it's just extending it further south, now down to 110.07. So Treasuries, that's for the debt contracts, now down some 8 ticks. Again, just some interesting positioning heading into this data in 2 minutes' time.
So there you go. So you get that wonderful heads up from the News Squawk guys, just telling you what's going on, and they're going to give you that. So that's what you get. You get that on your computer, and you get that sort of sitting in the background throughout the day. Very slowly, you start to pick up the vibes of how all of this works. They are amazing tools, and you can still get an offer with News Squawk through us for the next couple of days. Right. So let's just concentrate and just get things in line. So we've got the Japanese yen in the top left-hand corner. That's on a 5 minute time frame. We've got the euro dollar on the top right. I'm going to put that down to a 5 minute. Just getting a little bit dollar strength coming in there already. Got 1 minute to go now. In the bottom corner, we have got gold, which you can see that dollar strength from yesterday as well. That stock down, dollar up plays. Gold came off, really, really big move. And then in the bottom right, we've
So
got
just
the
1 minute
S&P
now
500.
on the non-farm payrolls print, and again that's expected at 113,000 according to Reuters. We'll then move on to the unemployment rate, which is expected to hold steady at 4.1%. We'll then cover any revision to the headline. We'll then run through the earnings components and work week hours. I'll then do the labour force participation rate, and then I'll cover the rest of the report, which includes the private, manufacturing and government breakdown, as well as the 2-month adjustment and the birth-death figure.
There we go, 30 seconds. 30 seconds to go. Looking for 113. And if you're not trading it, don't worry. There's more opportunities later. You don't have to trade the non-farm payrolls. Do not gamble into it. We say that every single time. Here we go. Good luck.
10 seconds. $12,000. That's 12,000 below the expected of 113,000. Unemployment rate, that's 4.1% as expected. The prior, that was revised lower to 223,000. Then for earnings, month to month 0.4 above expected 0.3. Year over year 4%, that's in line. And work week hours 34.3 above expected 34.2. Participation rate, that falls to 62.6 from 62.7. Then in terms of the breakdown, private, that was negative 28,000. Manufacturing, negative 46,000. Government, that was 40,000. And in terms of other revisions, the month-to-month earnings, that was revised lower to 0.3, so potentially cancelling out the headline beat there. And then for year over year, that's 3.9%, down from the prior 4%. Again, the kicker, obviously, will be that 12,000 print, which was much below expected. And
Very
again,
low.
the Reuters range was 0 to 200,000. In terms of the market reaction, obviously did see selling pressure heading into the release for Treasuries. That's very much reversed now, and we're above pre-announced levels. We've seen some softness in the dollar, which is just below it, above its 200 DMA for the dollar index at 103.82. Equities, less sure how to deal with this one. Relatively choppy price action given the relative Fed versus
It's a
growth
classic
offsetting
dovish
forces.
reaction. So incredibly low. That is obviously a stocks up, dollar down place. You can see the weakness
So
in
as we
that
did
dollar.
mention in our preview, there were likely some weather and strike-related distortions set to play around with the headline. It does appear that has materialised at 12,000. But as we did also mention,
Look at
the
gold though.
unemployment rate,
Gold's
which
the
is
interesting
derived from the
one.
household
It's
survey,
not rallying.
that's
It's
actually
not
held steady at
barnstorming rally. That is it.
4.1%, given that some of those that have been affected on a temporary basis, either via weather disruptions or
Amazing.
strike activity, they would still be classified as employed within the household survey. And again, there wasn't really too much takeaway from the earnings. It's very much as expected. As I mentioned, the month-to-month was firmer, but that was also subject to a downward revision to the prior.
Wow. Really, really amazing stuff. So a big dovish reaction
The
on the
2-month net
non-farm
revision,
payrolls.
that's negative 112,000. And the birth-death adjustment, 368,000 against the prior minus 128,000.
Just getting that,
Just seen
that,
some
that
commentary
dovishness now
here
coming
from
through
the
now on the
BLS.
stocks, which is good to
They note
see.
it's
So it is
likely that
working.
Payroll employment estimates in some industries were affected by the hurricanes. However, though, they do note it's not possible to quantify the net effect on the over-the-month change in national employment.
Yeah, really, really, really good stuff. You see that there? You see that now, that dovish reaction there? So we've said this all week long, that the way that balance in fundamentals works, you can see it there absolutely perfectly. I mean, no one was expecting that. 12,000, that's all? Gosh, see how different that is from the ADP number as well. Really amazing stuff. The last sort of few non-farm payrolls really have been amazing events. I absolutely love it. It's super, super cool. Okay, cool. Right. Okay, let's move on. Let's talk about one or two other things as well, because we've had a big week at FTUK, and we've got some giveaways to do, some contests in tune with our sponsorship this week from News Squawk and Trusted Prop, and we had a competition for Halloween, which was basically Send us your trading nightmare stories. I cannot believe hundreds and hundreds of people actually sent a story in, and we've chosen three. We were originally going to do one prize, but there were so many we had to just expand it out. So we've chosen three. So I'm going to run through them now from third to first. Now these were really long stories, so one of the guys in the back office has managed to summarize them down. But I think what we're going to do is we're going to put some content out around these, because there's some lessons in here for everybody. Because I'm sure that everybody watching will have experienced these kinds of things. Just reading them, I know that I have in the trading that I've done over my trading career. Okay, so this is in third place. So congratulations to Rida. Well done to you. You get a 50% discount off any of our trading accounts that we've got at FTUK. So congratulations to you. And this is what Rida had to say. On Halloween night, Jay sat alone watching the markets by flickering light when his favorite stock plunged. He couldn't resist and clicked buy despite an eerie chill. Obviously, this is Halloween themed. It sounds like you put it in ChatGPT here. But as soon as he entered, the market collapsed further, his balance bleeding red. He tried to sell, but his computer froze, the screen flickering ominously with warning messages. Too late. In terror, he watched his account drain to zero. The screen went black, then came back to with a final message: "Thanks for trading, Jay. See you next Halloween." Well, is that trying to sort of like intimate that there's some sort of like evil spirit in the heart of the markets? I'm not quite sure about that, but it's a good story. I think risk management is the key there. To be honest with you, Jay, whoever you are, I think we'll put some sort of risk management book on your Christmas list. I think that's probably a good thing to do. But yeah, congratulations, you came third on that one. 50% off any trading account for you, sir. Next is Lynetta Harrington. Congratulations to you, Lynetta. And you win a 10K two-step account. And this is the story. About 2 months ago, this is a good one. I had the scariest moment trading. After analyzing the market on my phone, I confidently entered a buy position with maxed out margin. I mean, that's clearly a good idea, isn't it? Obviously, on your phone, on maxed out position. Watching my account rise over $5,000. Suddenly, signals changed, and I realized I hadn't set a stop loss. Okay. Rookie error. As the market reversed, my phone froze while I tried to close the trade, leaving me frantic and fearing I'd lose everything. After what felt like an eternity, the screen finally loaded, showing a profit of $7,200. I closed the trade, relieved and grateful, marking it as one of my most nerve-wracking experiences. Wow. I mean, you know, I can totally relate to that kind of experience. I'm sure most people can. I think the biggest lesson for me there is don't trade on your phone. You know, and the phones are convenient. You know, I talked about this in one of the videos on the YouTube channel this week. They're amazing, but they also can help. They can hinder you as much as they can help. And if something goes wrong, trying to execute properly on your phone is not a good idea. But you know, Lynetta, I mean, I think you were lucky there rather than anything else. But you know, like putting too much leverage on is always the thing that kills you. But I suppose congratulations, you got your win. But I don't know. Yeah, tone it down. But congratulations, you can practice your new skills and hopefully not quite as scary in a two-step evaluation account on us. So congratulations to you. And finally, the last one is from Martin. You are first. You won, and you get a 10K two-step account, and you get all of the add-ons. Martin recounts a night that shattered his confidence as a trader. After a successful streak, he identified a perfect setup for a short position on the dollar against the yen. Despite margin restrictions, he entered a 10-lot trade. My goodness me, that's a lot of size. But anxiety led him to close it just before a key US rate announcement. The market then dropped 432 pips, costing him a potential profit of $26,500. This missed opportunity haunted him, ultimately leading him to lose his account and have a lasting impact on his trading mindset. Well, I'm not surprised. That's the kind of war wound most traders go through. It's usually after an event like that you start learning to trade properly because you missed out on such a big thing, and you suddenly realize in your head there's more to this. And then that sort of trading story that you carry around with you for the rest of your trading career, because you don't forget it. And as they say that the market is the best teacher, No kidding. It really, really is. But a great story. And I'm sorry that you missed out on such a massive profit there, Martin. But hopefully that has taught you some really valuable lessons. And that's the kind of content that's really, really good. So we've got hundreds of these stories now from everybody that sent them in. So I think it's a worthwhile event actually going through and actually breaking some of these things down. So we'll do that over the coming weeks. And we'll post it somewhere in videos or on emails or something like that and see what kind of lessons we can all learn from that. So yeah, definitely that is very, very good indeed. And also as well, I've been given, let's just, that ties up all of the Halloween stuff. Now I've been given the results as well. The guys in the back have come up with the results for the Non-Farm Payroll giveaway that we have got, and this is in conjunction with the guys at the Trusted Prop as well as News Squawk. Let me just go back to the screen, and I've got the winners of that. So these guys, they win a 2-step evaluation account and a 3-month subscription to News Squawk. I've never seen a prize that's quite like that. It's absolutely outstanding. And they came up with it. Look at this. This shows you where the expectations were. So Bale Victor, he wins an account. His prediction was 100k. We were way off there. Sage Paul wins as well. He was the closest as well with 101 again, and Deanna Complex as well, 108,000. So no one was under 100k there, but they are the closest winners. So that shows you how much a shift in the market can really cause people an awful lot of problems. Really interesting stuff. So congratulations to all of you. What an amazing week in markets we've had. Thank you very much to everybody that's joined in over the course of the week. And I thank you very much to everybody at the News Squawk and Trusted Prop who have done an amazing job of supporting us throughout the week. And I hope you've enjoyed our coverage of fundamentals throughout the entire week and our non-farm payrolls as well. Thank you very much for your support. Have a great weekend, and we will see you all next Friday.